Hello and welcome to another video. My name is Exo, and in today's video we're covering Ferrexpo. There's another stock analysis video, we like to do these. So we'll take a look at the company, what it does, kind of its background a bit, then we'll look at the analysis on Simply Wall Street, favorite stock analysis tool, and then we'll look at the income statements, cash flows, balance sheets, all that good stuff, and we'll have a little conclusion at the end and see if the company's right for you. So without further ado, let's get into it.
To live, I fight to strive. One day I'll have what I want in life.
Okay, so in essence, this company basically mines and produces iron ore pellets. Now, as you can see here, it's the third largest exporter of pellets globally, so it's up there. I just wanted to show you some of the key figures about this company, some of the interesting facts I've found by looking through their website. So they've invested heavily in their infrastructure, and you can see this from the virtual tour. Up here you can take a virtual tour and it's pretty substantial, the things they've got going for them. It's a bit of weird handling, but all of this is theirs, and then they have more going on. It's a big place. Some unique things about this company is its fleet automation it has here. And then it has mining electrification as well, so this cuts down the diesel consumption, which is good for the environment and good for the running costs. Solar power and dry stack taking. So all of these are just different things this company does to improve its revenues, improve safety, all that good stuff. So I thought I'd just show you that, as it's quite a unique thing that this company does. So I have another thing I'm going to show you later, but it ties in quite well with the stock analysis on Simply Wall Street. So we're going to head over there and then continue with that. Okay, so now we're on Simply Wall Street on the Ferrexpo. So we can see that it was founded in 2005, and then, as I said, sells iron ore pellets. This is not too important as it goes more in depth later. So we can have a look at the valuation. We can see that it's calculated here that is undervalued. Now, always do your own calculation and method to see if this is correct, or maybe you want a bit more safety factor in your calculation. This does a two-step discounted cash flow, so I quite like this one, so I agree with this. But yeah, price to earnings ratio has been good, so we can see the company is this darker blue, so it's doing better than the market and the industry. Lovely to see. Earnings are forecast to decline next year. Now this one I can tell you about. That's one of my things I wanted to show you, but I'll get into that when we get down to future growth. Price to book, again, good, better than the industry and the market, so nothing to complain about. This company has an excellent balance sheet that I'll be able to show you. Now here is where the things get bad. Now, we can all see that there's a lot of red for the future. However, I don't think this is the case. I don't believe this will happen. This company is heavily dependent on the iron ore price. Now, in the short term, yes, this might take a dip, but in the long term, I do not think this will matter. If you go on to monthly fall, this was released 11th October 2021, and it says down here that total pellet production grew by a further 2% to 2.6 million tonnes on a year. May not seem like much, but the firm has slowly upgraded its pelletizer. Now this is what I was mentioning to you about, and this caused production interruption throughout the year, and they still did the work good. Now this is not the part that is the troubling part. I just wanted to show that to you. Okay, now this is the part I wanted to show you. So despite their progression, Ferrexpo is only at the mercy of iron ore prices, like I mentioned. And China is the heart of the global steel industry, so when the factories were temporarily shut down in 2020 as the lockdown restrictions came into effect, the availability of steel worldwide plummeted. This is why iron ore prices went through the roof, as did the Ferrexpo share price. But today, thanks to the relative swift vaccine results in China, around 79% of the population is double vaccinated, and with factories back in full operation, the supply shortage of steel is now over. Consequently, iron prices have crashed in recent months, back down closer to pre-pandemic levels. Given that Ferrexpo business model is selling the iron ore pellets, this drastic fall in price will undoubtedly have a significant negative impact on the sales for the remainder of 2021, so I'm not surprised to see the share price crash. Now, this is going to continue in 2022, obviously. But I feel with iron ore, the demand for housing, demand for everything, a lot of stuff uses up, and it's a finite resource. Eventually you're going to run out, so eventually things are going to go through the roof again. So in the meantime, yeah, there might be a little dip, but to get in at a price like this for the upside in the future, I personally feel that is worth it. Yes, there is a lot of iron ore out there, but it's not unlimited. So eventually, the way our population's going, the way the demand is going, we're going to need more, and that is just how humans are. We're never satisfied, we just take and take and take till there's nothing left. Same with iron eventually at one point. So that's where I feel like this, future growth, yes, I feel like this is going to be a short-term problem. I feel that if Ferrexpo can just keep treading water until the demand increases again, then I don't see this being a problem. And I can show you that with the balance sheet, it's going to be okay, I think, in my opinion at least. Again, personal finance is personalised to you. You can go past performance and see this company's been great throughout the years. It's always done pretty well. Free cash flow, cash from operations, operating cash flow, so they've all sort of grown in line with each other, with operating expenses being pretty flat, so nice to see. High quality earnings and net profit margins are higher than last year, so you can go to past 5 years, and yeah, the company's done better than the industry, so it's nice to see that. And the last year, the company's done better than the industry. So the last year was good for the industry, as I said, with the iron ore prices, but the company's a steady grower anyway, despite this, and better than the industry. So as a mining company, this is one of my favourites so far that I've come to see, and this is what I did a sentiment stock analysis. If you've seen that, I sold that stock and bought more of this stock, so shows you my bullish thesis on this stock. Earnings grew, accelerated growth, earnings versus industry, all just been better, but we see that through the graph. Return on equity, which was good, all the way in a nice green. Return on asset and return on capital employed, good. Both the mining sectors do this, so it's quite a nice sector to be in. Now here is when we see the nice balance sheet. Short-term assets outweigh short-term liabilities and long-term liabilities, and it's just a lovely balance sheet to look at. I really like balance sheet that looks like this. You can see that the debt to equity has been, decreasing, sorry, and the equity has been increasing. Cash and equivalents is now surpassing the debt level. This might go back down again when the iron ore crashes, but I'm happy with the balance sheet, so it's reduces debt. That's what it's been sort of focused on throughout the years. So you can see that's reduced from 267% to 0.8% over the past 5 years. Debt is well covered by operating cash flow, and its EBITDA is great. So from here we have this stupid dividend. Now this dividend is ridiculous. I don't know why it says this, because I don't think it does say this in like Trading 212 is the platform I use, and I don't think it says this number, but it is a high dividend yield, one of the highest I've seen anyway. Stability and growth of this have not been the best, so we've seen a big increase 2015 2016, and then we plummeted to the floor. And they cut their dividend, then they brought it back, then they reduced, brought it up, and then we've gone back down here. So the dividends they pay though, when it's like this, is, I don't know, I just like the company either way. Would be nice to see a bit more stability in the dividends, but hey, they've increased over the past 10 years, so not all bad. Current payout to shareholders is good with 30%. And this is not the best, but 83% is still better than some ones I've seen, so this remains to be seen how it is. And again, if the iron ore price drops, then this is a likely case. If it goes up or remains as it is, then this is unlikely. So we've had some interesting insider shares buying. If I go down here, so you can see the insider trading volume. So we've had shares bought, we had a load of shares sold in 3 to 6 months. but we've had more buys than sells, I think, per person anyway. So we can go down here and see buy, sell. All the buy orders seem to be smaller though, and then we've had like big sell orders, so I'm not too sure why some people have decided to sell. You'd think these people with the huge amount of capital would be more sort of inclined and know more about the company, but I'm not sure. Only they will know, but it's something to go off anyway. Ownership breakdown, we've got private companies, state or government, employee share scheme, institutions, and individual insiders, so that's how that's not been anything diluted. And that's pretty much the analysis on the Simply Wall Street done. Now we'll take a look at the income statements and look how it's performed throughout the years and see what we can deduce from that. Okay, so now we're on the Ferrexpo income statement. We can see back to 2017 to the trailing 12 months. So going up, we can see that there's been a nice increase throughout the years and then being the highest in the trailing 12 months. Cost of revenue, we can see that that has also increased. The same can pretty much be said for the gross profit. We saw a decrease 2018, but then increase again. So lovely to see that. Net income, we can scroll down to this. We can see we've had decrease there, increase. So we've had pretty much increases, so we like to see that. So now we're on the balance sheet, we can see that current assets up here. So in 2017, the current assets did not outweigh the current total liabilities, but then going throughout, then the total current assets was better than the total current liabilities. Same can be said for the total assets. If we scroll down, you can see the total assets column here, and total liabilities column here, and the total assets actually did outweigh the liabilities, so by quite a substantial amount. So we just love to see it. Good balance sheet in this company. Okay, so now we're on the Trading 212 website. This is the platform I use, so I like to use this to analyze companies as well. So we can see dividend yield was 11.93%, not the 20 whatever percent that the Simply Wall Street showed, so you just have to check these. You can see a financial summary here, so 6 months ended 3rd June 2021. The revenues increased 74% to 1.35 billion. Net income increased to 149.9 million to 661.4 million. Revenues reflect Central Europe segment increase from 144.8 million to 428.4 million. More increases, 12.5 million to 180.1 million. Net incomes benefited from selling and distribution expenses decreases of 6% to 1.52 million. Expenses, interest expense on loan borrowings decreased of 30%. So all round, this company's just fucking smashing it. You can click all ratios to see the free cash flow per share. So free cash flow per share trading 12 months. I know free cash flow we got 0.5, dividend per share 0.1. So we've still got some free cash flow to go there. Management effectiveness, we've got return on assets, return on equity, and return on investment all being good. Financial strength, free cash flow of 284.92 million. We love to see it. We've got payout ratio of 51 in the trailing 12 months. We've had a dividend yield growth over the past 3 years of 28.73%. So this dividend has grown, but at this point it's good enough for me. I'm happy with where it's at. I just wanted to show you that so you can see the free cash flow and some of these statements here. Now we'll get into the conclusion. Okay, so in conclusion, for me personally, I really like this company. I own it, I've added to it. Past performance of this company has been great. The only thing about this company is it's dependent on the iron ore price. As long as we've got certain demand for it, then I don't think there's anything to worry about. We have a great balance sheet in this company, we have good income statements, we have just good valuation. Like I said, the only thing about this company is how it's going to perform in the future. It has done better than the industry, so if you want to be in a mining company, then this is one of the better ones to do that, as it's outperformed others. This is just a company I'll be watching a bit more closely as it goes on into the future to see how it performs, whether it has to take on massive debt. All these things remain to be seen. So I hope you enjoyed the video and got some value out of it. If you did, consider liking, subscribing, all that good stuff. Check out all the links in the description. Got Train 212, use that, get a free share when you deposit £1 on that platform. Blockfi and Gemini for your crypto needs. And I'll catch you in a bit. Peace out.
Tell me pretty lies, look me in the face. Tell me that you love me, even if it's fake.